Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video or listening to the audio podcast of it because you got an email from me telling you that it's uploaded. I got a free email list every morning before the opening bell. I send out an update with a link to my blog post of the day with my charts and thoughts of the idea, and also links to the most important articles I'm watching that I think we both need to know about. And today I want to talk about real estate. Real estate prices have been going up. Lots of people are getting into real estate for the very first time, not simply by owning their own home, but also by buying more properties to try to get on that trend of rising home prices. And there's two things about this trend I want to talk with you about. One, I believe it's something that's going to be a defining feature of the years to come. I don't think this is, peaking out or topping, because I think this trend is intimately linked to inflation, which I also think is going to be a trend of the next several years. Rising prices means rising rent, which means rising real estate prices. And a lot of this is driven by the simple fact that interest rates are zero. The Federal Reserve is engaging in these quantitative easing programs where they're buying government bonds to help increase government spending and maintain it. All this stimulates the economy. This also is a big reason why the stock market has been going up so much over the past year, but it's impacting the real estate market, because when you can borrow money to buy real estate at low rates of interest, that encourages more and more people to do it. And frankly, it's something I thought about doing myself last fall. Around September, I was thinking to myself, should I just buy some real estate in order to benefit from what I think is going to be a big trend? I think we're basically seeing some sort of version of the inflationary 1970s, not exactly perfect, but some sort of version of that play out. And what were the best investments in the 1970s were basically linked to inflation: real estate, commodities, material stocks, energy stocks, and so forth. And if you look over the past 12 months, we've seen a magnificent run in the commodity market. And I've owned funds linked to commodities I've spoken about elsewhere. I own also gold, silver, mining stocks. I also own energy stocks. But when it came to real estate, I thought, what is the best way to take advantage of the real estate trend? What's the best way? And there's three ways to do it. So I looked into these three ways. The first is the most obvious way: go to the bank, borrow some money, buy some real estate. And I actually considered doing that. I looked at the area I live in, and there was a property I was kind of interested in that was up for sale. And I thought about it. I could have borrowed the money to do it. But then I thought, what about these two other ways? Are they better? Because honestly, to me, I don't want to worry about, I don't want to buy a house and have to worry about renters and repairs. And I don't really want to have to do much work. I just want to ideally press a button and invest. So that's what I'm used to doing. To think about all this stuff, I don't really want to do. So the other two ways are to buy futures contracts on real estate prices. And you can do that. You can buy futures contracts on the Case-Shiller Real Estate Index, which tracks the price of real estate prices. Let me show you that index. It's not what I did, but I do want to show you the index because it's interesting to take a look at. So this is a chart from the St. Louis Federal Reserve branch. This is a government website, And this is the Case-Shiller National Index of Home Prices. They have gone up 14% in the past 12 months. And if you look back over time, this is a 10-year chart. Let's max out to going back to 87, basically. You can see that, yeah, there was a bear market in real estate, obviously, from 2007 to early 2012. That's, when the stock market crashed and all these things happened. I don't think we're heading for a repeat of that at all. I think this is a bull market that is going to last for several years. Yeah, it'll have its pauses, but I don't think we're heading for some sort of 2008 style collapse at all. But you can see, though, that the rate of advance since 2012 really picked up last year. That happened as Fed lowered rates to zero, as QE operations kicked up in a way never seen before in the history of the financial markets. It's helped to generate millions of people, of new speculators into the stock market, opening up Robinhood accounts, Bitcoin rising, and then falling, all sorts of speculative action, but also help these prices go up. Now, here's why this idea of the futures market really is not appealing at all when I looked into it, because you basically have to put down 10%. If you want to buy, let's say, $1 million worth of real estate, or invest or speculate in $1 million worth of real estate, it means $100,000. But there's no liquidity in these futures contracts. No one's really trading them. They're just out there. It's not a good idea. So the final idea, the simplest way for me, and I think probably for you, is simply to buy real estate investment trusts or funds that invest in them. Real estate investment trusts are publicly traded companies on the stock exchange that are required to give back, I think it's 10%, 7 to 10% of their revenue to their shareholders through dividends, direct dividend payments. And I looked at the statistics, and these stocks track real estate prices. They go up with real estate prices. They go down when real estate prices are in a bear market. So if I want to, and this is data going back to their creation in the early or late 60s, early 70s, they track the real estate market just about perfectly. So, or even better, they go up even more when real estate prices go up. So to me, this is the best way for me to get into real estate. Just buy real estate investment trust stocks. And so that's what I started to do last fall. And I bought a real estate investment trust ETF, RWR, which I own in my retirement account. And I'm going to show you one of the companies I bought to give you an example too. I have a large account. I got a small Robinhood account. I got a large account. And instead of the ETF, I own about 25 or so real estate investment trusts paying me steady Eddie dividends, month after month. Boom, I just get the check. But this is the key thing. These companies historically go up when real estate prices go up, actually go up more. And I don't have to go to the bank and borrow money to buy them. I got money in my brokerage account. If I want to borrow money, I can do it in the brokerage account and go on margin. I don't want to do that. But anyway, it's the simplest way to get involved in real estate. REITs, REITs, real estate investment trust stocks. So I'm going to turn and show you one of the stocks I own in a minute. Let's just look real quick at the news of the day, what's happening in the market, and then we're going to get into this topic more deep. So I just want to see what's happening. It's 1 o'clock as I'm doing this video. News of the day is Virgin Galactic had a space launch. They put Richard Branson, the CEO, into space. What did the stock do? It's rallied up into this news of the space launch, and it's collapsed today. It's down pretty good. It's down 14%. So this is another one of those examples where buying the news results in losses. If you bought the news of the launch, boom, you immediately got a 14% loss. All the people making money bought before the news came out. That's how the stock market tends to work. Traders front run news and then they sell once the news is out. So to make money in the markets, you always have to be ahead of the curve, not be someone that buys news events or sells when all the news is bad and all the bad news is out. That's typically when a bottom in the stock or the market actually happens. So another lesson to this, but the sad fact is this is what most people do. On the Robinhood top 100 list, this stock is in the top 100 most owned list. And the thing about it is it makes no money. It loses tons of money. I believe it's a horrible investment because of that. But people in the markets, many people in the markets are just speculating on these short-term gyrations. It's very difficult to come out ahead in the long run when you are doing that and doing it in companies not making money. I believe in buying companies that make a profit and pay dividends, not companies that lose hundreds of millions, sometimes billions of dollars, and you're just buying on the hope that it's just a fad. It's not what I'm into. But a lot of the stuff I do buy, people just aren't in them. They just don't care about them. It's not exciting to them, and you'll see that in the stock I show you. But today, in the blog post, I want to show you the ETF. This is the RWR ETF that I own in my IRA, a real estate investment trust ETF. You can see how it's gone up since it broke really 87.5 in January. It's just a boom, 45-degree angle. But it's the indicator on the bottom of this chart, which is so critical when you do a trade, an ETF, or stock. That's a relative strength indicator. Comparing a price action of this exchange traded fund to the S&P 500. To make a long story short, one of the core tenets of successful trading and investing is to buy things that are beating the stock market averages, and relative strength going up. That indicator going up means that this is beating the stock market. So when the market rallies, it tends to go up more than the market. And when the market dips, it will often not fall as much as the market. Right now, as we're speaking, Bitcoin is doing the opposite. Collectible coins, when the NASDAQ just dips 5%, they get killed. They don't have good relative strength. They're bad investments. And there's many other things that were hot last year, now not so hot. Tesla is another one. Penn Gaming is another one. There's just what's going on. In fact, the NASDAQ as a whole is now lagging the S&P 500. This means big cap tech, for the most part, is underperforming because money's been shifting into this year into things that pay dividends, pay good money, have earnings growing, not the speculative plays that so many were into last year and money losing companies. ARK ETF is a company specializing in these fad plays. You can see relative strength terrible with ARK. Here's Penn, relative strength down, terrible. It's below its 200-day moving average. Tesla, same thing. Tesla's just sitting on the 200-day moving average. So anyway, that's one reason I like the real estate stuff, though, is that it's outperforming the stock market averages. And you're getting good dividends, and you can buy something that you believe in, because you can believe, I do, in the trend that real estate prices are going to keep going up. There's no reason to think that's going to stop. And here's a way to get in on that. Hold on one second. Someone's calling me. I got to stop them. Sorry about that little interruption, because I want to show you the stock that's interesting, so you can understand what is a real estate investment trust exactly. What does one of these companies look like? So inside my Robinhood account, I've got 7 core positions I focus on. It's sort of just an educational thing I'm doing. Got a much bigger account, bigger positions, many positions, but just 7 here. One of these 7 positions is Colombia Property Trust, and you can see on this chart, the price performance has been very similar to RWR. That's what happens when you invest in a stock. 90% of the move in the stock, according to uh, the book How to Make Money in Stocks, which I recommend you read, but much of the move is due to the sector it's in. Stocks in a given sector all tend to trade together. That's why they're in the same sector. You have some leaders in the sector that can break away and do incredible. That's why they're the leaders. But most of the stocks are going to track very closely the performance of the sector as a whole. Colombia Property Trust has done that with RWR. And it's got a 160 employees. It's based in New York. But here's the neat thing about it. It pays a 4.89% dividend. So I'm getting this nice dividend yield that's being created by rents paid to this company. Some of that money's going in my pocket. 4.89% of my investment in this is going in my pocket. And in my Robinhood account, I only got $530 in there. So it's like, let's say I'm making $50 a year. In my main account, I think like $10,000 in this stock. So it's fun, to be able to make that kind of money by investing in real estate, by pressing a button. I don't have to go to the bank and take out a loan. I don't have to think about renters and, oh, here's a repair I got to make. It's just happening. And this stock can go up with the price of real estate, and I can sell it without thinking I've got to get a real estate agent, got to list my property on the market. How long is that going to take? If I sell it, I just press the button. Boom. That's why I like real estate investment trust instead of trying to go out and buy all these properties. So let's look at the company's website. And this will give you an example. This is their website, columbia.reit. And okay, privacy policy thingamajig. Overview. Okay. This kind of tells you what they are. But they basically own offices in Washington, D.C., San Francisco, and New York. So, that's what they do. And one reason the stock, like everything in the stock market, got hit so hard last year in March and April, all the shutdowns that happened, people left offices. So the stock got hit, it bounced, and it just sat there along with the rest of the sector until January. It was after January, people stopped being so scared about, are people going to, how long is this shutdown going to last, and how long is it going to take for things to get a little better at least? And now they're better, and different office markets are filling up faster than others, obviously. And this thing has a collection of many, many buildings. You can see their entire portfolio here. So you got $6.2 million of rentable square space. 94% is leased. Average lease is for 5.5 years, which is awesome, And let's see what their properties are. Maybe they got pictures or something. Here are the buildings. So I own a company that owns this building on Broadway, on Fifth Avenue, on Park Avenue. That's in New York. I like the DC properties. Those offices are just being rented like crazy. You got M Street, Market Square, another one on M Street. And we're in Boston. Huntington Avenue in Boston. And how about San Francisco? Maybe you live in San Francisco and you recognize some of these buildings. Well, if you do, I'm invested in them. And I'm not trying to push this stock on you, but if you bought it, you'd be invested in them too. But this is not like a super speculative play. This is not a stock you buy trying to, think this is going to go to 160 days. No, this is like, I'm investing in the real estate market. This is going to go up, at the rate of real estate, maybe 10, 14% a year. But I'm also getting the dividend, 4% a year. It's about investing. And that can play a role in portfolio diversification. That's how I'm treating these investments. And this is just one stock. I've got like 20 of these different kind of companies. And you can buy ones that aren't, office buildings. You can buy ones that are apartments. You can buy ones that are medical facilities, which I got one that's a medical facility. And all sorts of stuff. So this is how I'm investing in real estate. I think real estate is a good investment, and different ways to do it. But for me, real estate investment trust is the easiest way to do it. It's the way I do it, and maybe you'll want to look into real estate investment trust companies yourself. Now, if this is the first time you've ever seen me on YouTube, you need to click the subscribe button and then click the bell. You do that, click subscribe, click the bell, like this video too. I like getting likes. Like this video, encourages me to do another one real fast, but either way, click subscribe, click the bell, and then YouTube will notify you as soon as the next video I do is up. And then, because you got to get the next video. There's so much happening in the market, so much I want to show you. Today we talked about real estate investment trust. Tomorrow it's going to be something completely different. So be talking with you in the next video. Click subscribe, click the bell, so we'll be able to talk together in the next video. And I'll be talking with you later.